Since October 8th, a bank run has erupted at the Bank of Cangzhou in Hebei Province. Numerous online videos show long lines of people waiting to withdraw money at various branches of the Bank of Cangzhou. Not only were the bank lobbies packed with people, but long queues also formed outside on the streets, with some waiting even late into the night. To prevent a full-blown bank run, the Bank of Cangzhou is implementing a ticketing system, allowing only 2 withdrawals per day at some branches. Simultaneously, some people attempted to make transfers through their online accounts, but online transfer were temporarily suspended. The bank run at Bank of Cangzhou was sparked by a recent online circulation of a list of Evergrande's bank loan debt details, which claimed that Evergrande owed Bank of Cangzhou 3.4 billion yuan. On October 7th, the Bank of Cangzhou's official website issued a statement clarifying that Evergrande owed the bank 346 million yuan, not 3.4 billion yuan. Meanwhile, bank executives were dispatched to reassure their clients.
这个里我也给大家说一句，我以我个人的判断，根本没有风险。我们是国有银行，哪来的风险？如果你说自己担心取款自由，大家可以取。
3 government financial departments in Changzhou jointly stated to debunk rumors about the Bank of Cangzhou, stating that the overall development is healthy and stable, and that online information related to Bank of Cangzhou is seriously inconsistent with the facts. They urge people not to believe or spread rumors. Local law enforcement even arrested several alleged rumor mongers. Despite the efforts of the Bank of Cangzhou and the government to dispel rumors, it appears that depositors' concerns have not been fully alleviated, and the withdrawal queues continue. To address this, the Bank of Cangzhou erected cash barriers within the bank branches, both to manage the withdrawal process and to reassure clients that the bank indeed has sufficient funds. According to insider information, this involved the emergency allocation of funds by the People's Bank of China to help the Bank of Cangzhou weather the storm. Public data shows that the Bank of Cangzhou was established in 1998 through the restructuring of 13 city credit cooperatives. It currently operates 28 county-level branches and 23 urban branches within Changzhou's jurisdiction. The latest data indicates that as of the end of the first half of this year, the Bank of Changzhou's total assets were around 238 billion yuan, with non-performing loans of approximately 2,618 million yuan and overdue loans of 3,274 million yuan. As the Bank of Cangzhou grapples with the bank run, there have also been online reports of large-scale transfers from Shenjing Bank, which has close ties to Evergrande. Shenjing Bank convened an emergency meeting to discuss countermeasures and has imposed strict limits on mobile online transfers since October 9th. Shenjing Bank is the earliest established and largest city commercial bank in the northeastern region of China. In 2019, Evergrande became Shenjing Bank's largest shareholder, taking full control of the bank, and it was alleged that they had already emptied the bank's assets. Therefore, after Evergrande's crisis erupted, Shenjing Bank came under investigation by Chinese government regulatory authorities, suspecting that it had channeled over 100 billion RMB to Evergrande through direct or indirect means. In September 2022, Shenjing Bank was taken over by 7 companies, including Liaoning Provincial State-Owned Assets Operation Company Ltd. However, the debt black hole created by Evergrande still exists, causing panic among the public. The bank runs at Bank of Cangzhou and Shenjing Bank are consequences of Evergrande's debt risks spilling over into the banking sector. As of the end of June this year, the total debt had reached 2.38 trillion yuan, or $300 billion for the severely debt-laden Evergrande group. In fact, ever since Evergrande's debt crisis in 2020, investors and depositors have been closely monitoring the impact of the real estate business on the asset quality of banks. Some investors have raised questions on various platforms expressing concerns about the debt relationship between various banks and Evergrande. In response, many banks issued statements, some directly disassociating themselves from Evergrande, while others claimed that Evergrande's default would have minimal impact on them. These statements served to reassure, and for several years, Evergrande's default did not significantly disrupt the banking system. It wasn't until the recent arrest of Evergrande's chairman Xu Jiaying that investors and depositors completely lost confidence in Evergrande's ability to repay its debt after the default. Wang He, an expert on China's issues, pointed out that Evergrande owes a total of approximately 700 to 800 billion yuan in bank loans spread across more than 200 banks. However, the specific bank involved are known only to insiders, as Chinese authorities have imposed a gag order on banks to prevent a bank run for a long time. The bank run at the Bank of Cangzhou happened because someone leaked internal information, leading to public panic. The circulated list of Evergrande's debt shows that there are 5 banks with over 10 billion in loans, including China Minsheng Bank with 29.3 billion yuan, Agriculture Bank of China with 25 billion yuan, China Merchant Bank with 11.3 billion yuan, China Everbright Bank with 10.5 billion yuan, and Industrial and Commercial Bank of China with 10.3 billion yuan. These are all very large banks. 8 banks are owed over 5 billion yuan, including Shenzhen Bank, which has 7 billion in outstanding debt. 25 banks have loans exceeding 2 billion yuan, most of which are small and medium-sized banks. There are also many smaller banks with even smaller loan amounts. For these small and medium-sized banks, even the write-off of loans in the billions can potentially lead to their collapse. Moreover, not only Evergrande, but also many more real estate companies are continuously defaulting on their debts, such as Country Garden and Sunac, both of which are large-scale real estate companies facing debt crisis. The risk is likely to spill over into the financial system. Therefore, the entire banking sector in China is likely to face significant impacts from the fallout of real estate industry defaults like Evergrande's, which will have profound implications of China's financial industry. The bank runs at the Bank of Cangzhou and Shenzhen Bank are just the tip of the iceberg. The world is closely watching whether this issue will escalate into a broader financial crisis in China. In recent days, some small and medium-sized banks in China have already seen a run on deposits. Some depositors are queuing up to withdraw their money, even willing to forgo interest to withdraw their principal. Financial experts have analyzed that in recent years, several village and town banks and rural commercial banks have gone bankrupt, and even larger banks like Baoshan Bank have collapsed, causing significant public concern. The defaults of 5 village and town banks in Henan and Anhui have left many depositors with nothing. Therefore, many depositors are worried about keeping their money in small and medium-sized banks, fearing potential problems in the future, and they prefer to withdraw their money even if it means losing interest. This in turn increases the risk of these banks. To prevent a liquidity crisis, many banks have imposed withdrawal limits, causing inconvenience to the public. They've been talking about the withdrawal limits at banks these days. I needed to withdraw some money this afternoon, so I decided to give it a try. They told me I could only withdraw 5,000 yuan per day. I said, what am I going to do with just 5,000 yuan? The bank told me that I could try to adjust the limit in a few months. A few months? I need the money urgently now. I think this withdrawal limit is having a huge impact on the lives of many ordinary people. Some people have credit cards with a limit of only 1,000 yuan, and they can't even deduct their social security payments directly. Some people have to pay their rent in installments each month, and some can't even afford their children's school fees. Some children are waiting to see a doctor in the hospital, and when they try to pay, they find out there's a limit of 3,000 yuan. What's the purpose of this withdrawal limits by the banks? This is a Huaxia Bank branch in Changchun City where a depositor has 1.5 million yuan in their account but can't withdraw it. In addition to the impact of real estate industry's defaults on banks, even worse in the imminent crisis of local government debts and urban investment bonds as the economy declines. Public data shows that in the past 3 years, local government debt in China has surged, the local government debt reaching 35 trillion yuan last year, and urban investment bonds reaching 60 trillion yuan. Local commercial banks, including city commercial banks and rural commercial banks, are the major holders of these local debts. Financial expert Lau Man wrote in an article that since 2019, city commercial banks and rural commercial banks have gradually lost their profitability. At the same time, the total amount of non-performing loans in these banks relative to their profit is too high. Data shows that in 2022, city commercial banks had around 477 billion yuan in non-performing loans with profits of only 255 billion yuan. The scale of non-performing loan is 1.87 times their profits. Rural commercial banks had 754.6 billion yuan in non-performing loans with profits of only 208.1 billion yuan, making the non-performing loan scale 3.63 times their profits. This means that these banks have very low risk tolerance. Unfortunately, these two types of banks hold over 6 trillion yuan in local government debt bonds. If even 10% of these bonds run into problems, it could consume all the profits of these two banks. What happens next, whether the banks will collapse, depend on the central government. The problem is that the central government doesn't have much room to maneuver in terms of finances, and any bailout would likely rely on the central bank printing money. Lau Men warned that if the situation escalates to the point of printing money, we will all have to fend for ourselves. Local Chinese governments issue urban investment bonds, ostensibly to raise money from banks for infrastructure development. The bank's money is essentially the deposits of savers and the financial products purchased by ordinary people. In other words, the government is treating ordinary people as cash machines. If local governments cannot repay their debts, once the banks default, people's savings will disappear, and financial products may even be excluded from the scope of compensation, leaving people with nothing. This year, local debts represented by urban investment bonds have already started to default frequently. Not only Yunnan, but also in the first half of the year, Guizhou, Guangxi, and Shandong openly defaulted on urban investment bonds. For example, Guangxi stated that the local finance department would not help the urban investment platform repay its debt. These are signs that widespread defaults of urban investment bonds are imminent. The bankruptcy of some local banks is due to their assets being emptied by local governments and local government being unable to repay the debts. Ultimately, the risk will be borne by thousands of depositors. Chinese local governments repay urban investment bonds with a trick, borrowing new debt to repay old debt. On October 9th, according to reports from multiple Chinese media following Inner Mongolia and Tianjin, provinces such as Liaoning, Chongqing, Yunnan, and Guangxi have also joined the ranks of issuing special refinancing bonds. Currently, these 6 provinces have issued or are planning to issue special refinancing bonds with a total amount of about 320 billion yuan. The so-called special financing bond, according to the official explanation of the Chinese Communist Party, belong to the government bonds on a large scale and are a special type of local government refinancing bond. That makes them special is the use of funds. Ordinary refinancing bonds are used to repay the principal of expiring old debts, while special refinancing bonds are used to repay the stock of local government debts, which is essentially hidden debt. And a significant portion of hidden debt is urban investment bonds. In essence, it is using special refinancing bonds to repay debt, making the local government's hidden debt explicit. Analysts point out that this is to allow local government to borrow new debt to repay old debt, thereby avoiding a debt crisis. This year, the issuance of special refinancing bond has reached 3.8 trillion yuan, setting a new record. Financial commentator Zhen Shugang analyzed that when the Chinese government orders local governments to issue debt, the main purpose is to alleviate the pressure on local governments and prevent defaults. He said, borrowing new debt to repay old debt is, of course, not a solution to the fundamental problem. It's just a way to buy some time and avoid debt defaults. Otherwise, it would bring money economic problems, and these are all interconnected with banks. Local government debt is mainly borrowed from banks. Financial scholar Xi Ling analyzed that this debt crisis is difficult to resolve. The only way is to stall for time by issuing new debt to repay old debt and barely make ends meet. This signal indicates that more than half of China's provinces have accumulated local government debt exceeding 100 billion yuan in individual provinces. In the face of an economic downturn, China's government financial strength has been severely underestimated. On October 11th, Lau Men wrote again. In September, the number of overdue bank commercial bills reached 245 cases, remaining at a high level. It was 216 cases in August and 264 cases in July. He pointed out that when any industry experiences widespread defaults in commercial bills, it signifies that the industry itself has problems. Even if banks scramble to find money to remove themselves from the default list next month, it won't be of much use. More importantly, in September, the following 5 rural commercial banks appeared on the continuous overdue list. Historical experience tells us that whenever a cockroach appears, there are bound to be thousands more behind it. If you're responsible for your own money, leave rural commercial banks immediately. don't believe in the 500,000 yuan deposit insurance. This insurance only pays out when the bank goes bankrupt, and China will not initiate that bankruptcy process. Depositors in Henan have still not received this insurance payout. One netizen analyzed, these overdue commercial bills are all bank accepted. Enterprises are required to pay a deposit when issuing bank accepted bills, with most enterprises paying at least 80% as a deposit. However, when due, the bank is obliged to pay the full amount. The continuous occurrence of overdue bills at banks may be due to technical defaults or insolvency. This also indicates that banks are indeed facing a liquidity crisis. Facing various crises in the banking sector, China's national team has finally taken action. According to a report by National Business Daily on October 11th, to address the financial risk caused by the real estate industry's default, Central Huijing Investment has directly increased its holdings of A shares in China's 4 major listed banks. The aim is to boost stock prices and hopefully obtain better financing to solve their current liquidity problems. The New York Times recently reported that the Chinese Communist Party directly or indirectly holds control of almost all banks. So besides having extensive regulatory powers, it can also significantly influence the fate of banks. According to insiders, revelations stress tests conducted on state-owned banks last winter found that these banks could survive even if China's real estate market further deteriorated significantly. However, at least half of the banks may need additional capital to ensure compliance with tightening international reserve funding standards. But Wang He's analyst suggests that the Chinese Communist Party may find it difficult to control the situation. Firstly, there's capital outflow. Although local authorities have already imposed restrictions on large withdrawals to prevent capital flight, they can't control the vast underground channels of fund circulation. Secondly, there's massive offshore RMB, which is beyond the Chinese Communist Party's surveillance. According to the official Chinese statistics, China's overseas RMB is roughly over 1 trillion yuan. However, according to a report from the Middle European Lu Jiazui International Finance Academy, the offshore RMB has already exceeded 12 trillion yuan. Furthermore, the financial corruption within the Chinese Communist Party is very severe, and party elites continuously transfer funds overseas, effectively hollowing out the domestic financial system. Therefore, the outbreak of a financial crisis in China is almost inevitable.